Why is the Tesla stock falling? Tesla, like many other stocks, was destroyed by the bear market in 2022. In contrast to many of these stocks, the sell-off has accelerated in recent months. While the stock has slightly recovered from its lows, it is still down 46% since October and 70% since late 2021. While there are numerous reasons to believe the decline is justified, Tesla stock is beginning to look appealing at these levels. Let's look at 3 issues that have pushed the stock down to determine whether Tesla is a smart choice. One reason why Tesla is falling right now in 2023 is because Tesla delivered fewer than expected in 2022. Tesla recently announced its 4th quarter production and delivery results, which fell short of expectations. In the 4th quarter, the company produced 439,701 vehicles and delivered 405,278. Overall, deliveries increased 40% to 1.31 million, while production increased 47% to 1.37 million. Both metrics fell short of Tesla's long-term growth target of 50%. To put things in perspective, Wall Street expected 415,000 electric vehicles to be delivered in the 4th quarter and 1.8 million for the year. Perhaps most concerning to investors was that the poor performance occurred despite the company offering steep discounts to potential buyers to close out 2022, offering $7,500 to those who took ownership of a Model 3 or Model Y in the final 10 days of the year. Tesla also reduced the price of its most popular models for Chinese customers. There is no surprise Tesla has fallen 46% since late October because the CEO Elon Musk appointed himself CEO of social media company Twitter just after taking the company private. Elon Musk was already overburdened with his various responsibilities at Tesla, SpaceX, Neuralink, and the Boring Company. Given the state of the economy and the difficulties Tesla is already facing, the enigmatic leader is likely to be preoccupied. Some investors believe Elon Musk is simply taking on too much and are hesitant to continue holding Tesla stock while its CEO is so preoccupied with his latest venture. This growing lack of investor confidence will almost certainly continue to weigh on the stock, at least until Elon Musk delegated control of Twitter. The economy weight on Tesla is the 3rd reason why it's falling. If there has been one constant over the last year, it has been macroeconomic headwinds, all of which will continue to weigh on car sales. Last year, inflation reached its highest level in 40 years. In response, the Federal Reserve raised prime lending rates 6 times in 2022 to slow the economy and, indirectly, cool the rampant price increases. As a result, everything purchased on credit has now become more expensive, with interest rates reaching their highest level in 15 years. Credit card rates reached new highs, and auto loan rates reached an 11-year high. Furthermore, the Fed is expected to keep raising rates until they reach a peak of between 5% and 5.5% in 2023. Higher prices and rising interest rates have already put a strain on consumer budgets, putting a luxury brand like Tesla out of reach for most car buyers. In fact, data suggests that even wealthier consumers, who make up the majority of Tesla's customer base, are cutting back on spending. However, while the reasons for its fall are understandable, we must ask the ultimate investing question: is Tesla stock a buy? The answer, like many others, is dependent on who you are as an investor. Each of the issues mentioned above is of a temporary nature. As the adage goes, this too shall pass. That is not to say that the stock will fall further, but predicting a bottom is notoriously difficult. Investors who were excited about Tesla when the stock was priced above $400 should be delighted that shares are now available at a 70% discount. In terms of valuation, Tesla is now cheaper than it has ever been, with a price-to-earnings ratio of 38. However, it is still trading at a premium to the S&P 500, which is trading at slightly more than 20 times earnings. Those who invest in value stocks are unlikely to be swayed by Tesla's current price tag. The global electric vehicle market is expected to reach $434 billion by 2028, up from $165 billion in 2021. According to analysts' consensus estimates, Tesla generated $50.2 billion in auto sales through the first 3 quarters of 2022. and is expected to end the year with a revenue of about $83 billion, demonstrating the magnitude of its remaining opportunity. So, for those who can handle a little volatility, Tesla stock has a lot of upside potential, which is why I've made another video on talking about Tesla stock update and predictions for this year, which is the video you can see on your screen.